What's going on, traders? Welcome back to my YouTube channel. Hope everybody's doing absolutely fine. So the question is, how can you be on the right side of the market every single time? What does that mean? Well, we'll go into a little bit more detail shortly. This was my one trade today. Now, some of you might look at this and be like, Rox, what the hell are you doing? Well, I think all jokes aside, I mean, on the live session today, we were sitting on the 1 minute time frame for roughly, I'd say, 2 hours and 55 minutes. In this area here, just absolutely ranging. The markets didn't go anywhere. Jeez, I'm hot. The markets did not go anywhere. And the only one trade that I did find that I liked was this one here, as you can see. But unfortunately, when I went to take the trade or plan the trade, always plan your trades. When I planned the trade, as you can see here, excuse this, pretty rude, put this on mute. When I planned the trade, unfortunately, the market didn't give me the rejection that I needed. It was in and around this level here. I was looking for the market to create an indecision, one more indecision, or actually a momentum candle. So I pushed down without triggering in the trade. As you can see, this candle just flew. I mean, if we got in this trade, it would have been break even anyway, but yeah, it is what it is. So we were sitting here, and about 10 minutes towards the end of about 3-hour session, I said, you know what, I think as a final trade for this live session, why not take a trade opposite to what the retail traders are going to do? Crazy idea. Have you ever thought about it? Think about this. How many times have you taken trades and they've just constantly lost and lost and lost, and then you had this thought in the back of your mind, maybe if I just took the opposite trade to the trade that I wanted to take, then maybe that's going to win. Something to think about, right? Anyway, I'm not encouraging you guys to do this because it's not the way you should be trading, but the majority of the traders on the live session said sells. So I said, well, you're retail traders. I'm a retail trader, but you're retail traders, and I'm going to go against what you believe. So I took the trade, as you can see here, as a buy because they said sell. And as you can clearly see, I'm just removing some of these red lines so that you can see that the stop loss was never hit. They said sells, and I said too many retail traders are going to take sells. It's too obvious. I'm going in for the buys. Now, I didn't want to cheat the markets. What do I mean by that? Well, I didn't want to place my stop loss above the higher low. Here, I said I want a safe but sorry stop loss, so I opted for the 10 pip stop loss. As you can see, it served me very well for the duration of this trade. Granted, the overall structure of this market was pushing up, so I'm trading in line with the trend for anybody that's going to try and get onto my back here. But that was the reason for going into the trade. Took the trade, as you can see, we sat in some drawdown. I was only triggered in here, by the way, not over here. It was just this little wick that triggered me in by spreads. Suffered some drawdown for quite some time, and then the momentum kicked in. As you can see, I went for a 1-to-2 risk to reward ratio trade, so it was a 10 pip stop loss for a 20 pip target. And somebody just messaged on Instagram and said, oh, Rox, why are you not consistent with your risk to reward ratio like you teach? Come on, man. Listen, my stop loss size is normally 3 to 5 pips maximum. Okay, if I'm taking a trade and I have to put my stop loss below the lowest point that I feel the trade is going to be safe, I'm using 10 pip stop loss. I'm not going for 30 pips. If I'm going to have to increase my stop loss, then I'm going to sacrifice 1R. I just want to make money. I don't want to make more than I think I can get out of the markets. I just want to make money. If this was a 3 pip stop loss or a 5 pip stop loss, I can go for 1 to 3 because I understand that the market's range could push 15 pips. But to expect the market to go another 10 pips just for the sake of going for a 1 to 3 when I have a bigger stop loss is absurd. So for that reason, I never went for a 1 to 3. But you can't shoot the messenger. If somebody teaches you something, you know, it's then down to you to go and backtest that and figure out if it works for you. Trading isn't just about 1, 2, 3 ABC. There's so many different variants you have to think about here. And yes, my last YouTube video was about being consistent and holding your trades, but my plan for this trade was to take it, with a 10 pip stop loss and go for 1 to 2. That was the plan. I took it, I held it, and we hit targets. So, I mean, you can't please everyone. Let's just be brutally honest here. If I'd lost this trade, somebody would have educated me on that. And if I'd hit a 1 to 3, somebody would have educated me on that. And if I hit break even, somebody would have educated me on that. Listen, I'm happy, I'm content, and that's what's important, right? So I took the trade. You can see the market went in a direction. Could I have gone to a 1 for 3? Well, duh. Of course I could have. Because now I can see the market went 1 to 3, right? But if I had originally targeted 1 to 2 and then went to 1 to 3, and then the market didn't hit my 1 to 3, then I would have had to be dealing with emotions because I went against my plan. So that was that. So what's the moral of the story here? How can you always be on the right side of the market? Well, here's the lesson, right? There's 3 phases to any market structure. You have a sideways moving market structure, you have an uptrend, and you have a downtrend. Okay? Now, when the markets are moving sideways, there's so many different reasons why it could be doing that. We're not going to name them just in case I get some of the terminology wrong, but there are so many different reasons why it's moving sideways. What does a sideways market mean to us, or what should it mean? Well, to be brutally honest with you, it should mean absolutely nothing. If the markets are moving sideways, it clearly means it's not trending, it's not going up, it's not going down, we can't identify the momentum. It's probably best to do what? Stay away from the markets. So when do we want to trade? Well, this is the point. 3 structures, sideways, up and down. We only want to trade when the market is moving up or when the market is moving down. So how does this give us the answer to the question? How can we always be on the right side of the market, or how can we always get in a trade that can never be wrong, a wrong trade or a bad trade? Simply by trading when the market is trending. Now, so many traders have it in the back of their minds that, well, they don't have it in the back of their minds, but they're always constantly thinking of things like, the market is overextended, it should reverse. The market is coming into a supply and demand zone, it should fall down. There's a strong resistance level, the market won't break above it even though the market is trending up. And there's almost some sort of like analysis paralysis, basically where traders just block their minds from wanting to take trades with the trends. And this is where the biggest problem comes, because now you start to think that you can predict what the market is doing as opposed to the market doing what the market is doing. And I mean, this example is a fine example. I'll be brutally honest with you, all jokes aside about why this trade was taken. Look at the overall bias of the market. The market is moving up, right? Yes, we moved sideways for a period of time, but not at one stage, not one stage did this market structure tell us that it has reversed. Okay, there's signs that it may be reversing and we may have a big exhaustion or a pullback or whatever you want to call it, but there was not one sign to say this market had reversed. So the question is this, right? If you were asked this question, somebody said to you, well, look, you've got one decision to make. Are you taking a buy or are you taking a sell? And if you take a trade and the market goes in the direction you call it, I'll give you £10,000. Are you going to be here anticipating this reversal when the greatest traders who have ever lived have always traded with the trend? You know from your back testing, from your trading plan, and from what I'm teaching you and everybody else or maybe teaching you, trading with the trend is your friend, or trend is your friend. You get it, right? What are you going to do? You're going to take a buy or you're going to take a sell? Well, it's hard to say you'll take a buy, but if you had one chance, it makes more sense that you take a buy than you take a sell, especially when the market hasn't confirmed no sell structure or hasn't even reversed yet. So how is this going to help you with your trading and making sure that you're getting on the right side of the markets? Well, the point is, trade with the trend. And what do I mean by that? Well, I mean, stop allowing the fear of the markets trending for too long, key levels being levels which price can reverse out, trying to anticipate distribution, accumulation, areas in the market. Stop trying to think about supply and demand zones as special institutional levels where the market's going to come back to, then all of a sudden rally in your direction because you were able to anticipate the point at where the market's going to go. Look how long. This is a 1 minute time frame. Let's get off of this. Go to the 5 minute time frame. Look how long this has been trending, right? What can you do in a situation like this? Well, remember we said we trade with the trend up and we trade with the trend down. Now, let's confirm a couple of things here. Very simple. Trend to the downside. We have a brick wall here. Price is trading below this brick wall, meaning any sells below this level means you can sell. Period. Fact. This is not a trend line. This is a bloody brick wall, meaning price is below it. So if you take a sell and the market is trading below it, as long as you have your stop loss above this brick wall, no matter where you take this trade, guess what? In theory, if the market's not broken it should do what? Go down. Now that is a strategy in itself. You can't use it as a sole strategy. You need to find confluences to then add to that to help you get better entries and better risk to rewards. But what does it mean if the market decides to start breaking it? Well, that's a strong sign that there is a potential reversal in the markets. So you have evidence here of a downtrend being violated. You have evidence here of price breaking structure, indicating a potential change, a directional bias, a change in directional bias. Then you have areas in the market where you look for price to break above to confirm, let's say, a bullish sentiment or a new bullish trend forming. And then you have areas in the market where you look at to make sure that as long as price trades above these levels, you're good for buys when the time is right. And then you start to look at how the new structure is forming. Structural lows, structural highs, structural higher lows, higher highs. And as long as price is above this level, then in theory, you're looking for what? A trend up. Now, let's say we're looking at this. Now we got in our mind, we're looking for buys. This is messy. You may not buy this. Totally understand that. But what happens if the market pushes up? Well, the market moves in two phases. Three phases. A push phase? No, two phases. A push phase and then what? An exhaustion phase. Now, how do you know it's time to buy here? Well, you look for more confluence. You find supporting evidence where price is creating wick rejections, higher lows, coming back for double bottoms. And you say to yourself, well, as long as price doesn't break this level, I'm good for buys. How can you trade this? Well, the trend is up. Don't deviate, don't look for reversals, don't plot in any resistance levels, don't try to take sells, just follow the market's behavior as we've seen here. Look how the market is moving over here. Look for the evidence and confirmation that supports why this is an uptrend, and then going for the trade. How do you go for the trade? Well, you see multiple wicks. Take a trade like this. Stop loss below this level. Go for your targets. Here, let's go for a 1 to 5, just for the fun of it. If you don't want to trade like this, guess what? If the market's made a higher high and a higher low, then what do you expect the market to do eventually? You expect the market to make a new higher high. So trade like this. Wait for price to break above structure. Give you more evidence and confirmation that the market's going to continue up. If you don't want to trade this because price hasn't come back for a double bottom, or you don't feel confident with the wick rejections, what can you do? Well, again, just allow the market to go through its phases. We're still in an uptrend. Don't change your bias. Don't look for rejections. Don't look for anything that supports a sell. The market is still up. Identify areas in the market where price is creating levels. Take the higher low, or look for patterns, double bottom patterns, and then guess what? Place your entry above here for the break, because what do we anticipate the market to do? We anticipate the market to make a new higher high. If you don't want to take the trade like that and you see an engulfing candle, take the engulfing candle. Why is this okay? Because what do we expect the market to do? Is make a new higher high. And this happens every single day, near enough. Why make it difficult for yourself by anticipating reversals, playing with supply and demand zones, looking for support and resistance, allowing your mind to take over and make you think that the market can't push anymore? Just trade with the damn trend, guys and ladies. USD JPY, 15-minute time frame. Look at the structure of the market. Consolidation. Break out of the consolidation. What do we expect after a push phase pullback? Wick rejections. What can you do now? The trend is confirmed. Broken out of consolidation. If it's going to continue down, set your trade. Stop loss above key levels. Go for your targets. Now, granted, you're not going to win every trade, but you're more than likely to win more than you're winning now. Do you understand? Trade with the trend. Don't be scared of it. I mean, is this even recent? Yeah, look, recent data. Okay, so the market was pushing down, trending. Price had a really strong push to the upside, potentially changing here to a buy structure. Then what do we see? Well, we see the market had a strong push to the upside, a really strong push back to the downside. We can see here that price, well, we could call it breaking structure, or we can just call it the market just sitting here, whatever. But you can see that the market is starting to push down, creating what we know to be in a downtrend, lower lows and lower highs. You see a level created here, a level respected, wick rejections. How can you enter the trade? However you want. Pin bars below the level, stop loss above, and then just go for your targets. 1 to 3 here, very simple. 1 2 3 here. No, not necessarily 1 to 3 on this one, but who cares? You get the point, right? Stick with the trend, because guess what? That's how you can always be on the right side of the markets. Doesn't mean you can't lose, it just means that you're going to lose less than you're already losing now. And if you do lose a trade, when you take a sell in a sell by structure or trend, you can't be wrong, because it's trending down. It's already confirmed to you. When the market is trending up, making high highs and high lows, and you take a buy and you lose, you can't be wrong, because the market's trending up. There's no guesswork, there's no second thinking. You're already right. It just means the trade didn't work out this time. And obviously stop loss placements and entries are a very important factor, but that's down to you to decide, or maybe we can do that on another episode if you enjoyed this one. I didn't intend to spend too much time on this, but we have. Hope you've enjoyed the video. As I always say, if you have, please smash that like button, subscribe if you haven't, turn on notifications, and until the next video, continue to trust the process.